Right, so moving over to dollar index, we're having a look at the weekly time frame, and we've just finished covering the US 10-year yields and the bond market on a weekly and daily time frame. So the higher time frames we've covered, and I made it clear exactly what my bias is, where the market has gone, and where the market is most likely to draw into. Now we're having a look at dollar index on a weekly time frame, and as you can see, from the beginning of 2025, it has not been good news. So if you're looking at risk off, if you was looking for a risk off scenario going into 2025, well, you're wrong, because it was really risk on scenarios, and we've seen GDP USD, Euro USD rip to incredible highs this year. The question is, will we hold at those current highs? And I'm talking about GDP USD and Euro USD, or will we see a reverse of the bull trend? So obviously, I'm showing you guys dollar index. So if we see a reverse of the bull trend for GDP USD and Euro USD, the complete opposite will happen for dollar index. I'm confusing dollar index and GDP USD and Euro USD together. Mind me about that. What we're looking at here is the capitulation down into the weekly sell side liquidity at 100.163. What we've seen after that has happened, because that is a major draw on liquidity, as well as the run down into the 1 month sell side liquidity pool. We've dug into the 3 month fair value gap. So this is actually a 3 month. Let me just show you guys quickly. This is a 3 month BISI, 3 month buy side balance, sell side inefficiency. And after a lot of range bound price action that we've seen here, buy side has been taken, sell side has been taken. Now, within the next 2 months, I mean, we've still got quite some time left. The question is, are we going to close below that monthly sell side liquidity pool, which is at 100 point, I think I just mentioned it a minute ago, 100.163, or will we close above? Because right now, how I see price is it's somewhat completed its delivery to the downside, although we've still got room left to go. But because we've seen a hammer, bullish hammer formation forming just after sell side has been taken, not just one, but multiple levels of sell side. So we've got the weekly and we've also got the monthly. You've got the bullish hammer forming where price action actually traded lower than the previous week's low, but we rallied right back up inside of the previous week's price range, which is also, I mean, is just below the monthly sell side liquidity pool, 99587, 99578. It's actually one, my bad, guys. It's actually 1 point above the liquidity pool. Just to make sure that this is accurate, 99578. Yeah, so it is accurate. Sorry, my bad. So the low is 99578, and where we have closed for the week is 99587. 587. So let me just make sure that what I'm saying is correct. So we closed at 99587, and the lows is at 99914. No, the lows 99578. So we actually managed to close higher than this monthly sell side liquidity pool, which then gives me that bullish confirmation to let me know that there is a chance for us to rally back up into this SIBI, this fair value gap. All right. Now, I'm not saying that we can rally and then continue rallying higher, because, oh boy, I mean, there is a lot of uncertainty in the market, and you can see over number of asset classes, not just dollar index. We can see over the stock index markets, the forex markets, gold, BTC, So what I'm looking out for is a draw into this region here, this premium PD array. All right. This could be seen as a low-hanging fruit on a weekly time frame, but I am expecting at least the 100.276 area to be met. Right. If we draw up into the midpoint of this area, then I'd like to study how price reacts in this area and whether it would want to reverse or continue higher. The next point of interest would be 101.267, which is the upper part of the SIBI, fair value gap. And when we move over to the daily time frame, it's clearly obvious how bearish we've been this year. You know, this looks like any other, short-term retracement before continuation to the downside. Now the question is, will we get that? Now, if we do get that, where will we reverse from? And I'm having a look at this area here. We have a volume imbalance. We have a daily SIBI that was created from 2 weeks ago, really. You could even say 3, but 2 weeks ago, really. We've tagged it last week, Tuesday, but we failed to get back up into that area there. This is a new week opening gap low and new week opening gap high. We've been trading in this area for 1, 2, and 3 days. So I do believe that we've finished our delivery into this area, and now we're looking for the next price leg up into, to be specific, 100, 163 to 100,910, with an expansion to the upside and a potential expansion even further up. We could see Euro USD and GBP USD falling, as whenever we see dollar index rising to the upside, that shows risk off scenarios. As in, investors and traders will more likely want to put their money into the US dollar, in comparison to GDP or euro or gold or BTC or the stock index markets. But it doesn't 100%. It doesn't play out that way 100% of the time. Good thing I said that correctly. But yeah, on the daily time frame, it is a bit choppy. It would be a lie if I told you that it's just clear cut. It's easy to tell the direction of where the market's most likely to go. But we've got 2 areas of importance, which really is the new week opening gap and this SIBI. Right, gun to my head, I'm looking for a draw to the upside, which also goes, does it go hand in hand with a draw to the upside for the US 10-year yields? I will be honest with you guys, it actually doesn't, because I'm actually expecting a draw to the downside. So I'm going to keep it like that, and I'll leave you guys with a weekly. Love and leave you. If anything changes, by the way, guys, my bias is bullish. If anything changes, I'll keep you guys updated.